This year it's all about macro, it's all about a new player coming into the market, which is potentially BlackRock or other institutional investors. But again, I think it's a macro picture that brought the crypto market down in November 2021, and I think it's a macro picture that brought it back up.
Do you think it stays here?
I think we're going to rally further, right? Because there is just more incentives.
What will be the catalyst for that rally?
Well, one, of course, is the Bitcoin spot ETF approval, right? When you look historically, in 2017, when the Bitcoin futures was announced, until it was actually approved, there was like 6-7 week window. Bitcoin prices actually rallied 180%. So I think we can make an argument if a Bitcoin spot ETF is actually approved, prices will just rally further until basically there is the last buyer in the market. Okay. I think that will be a big trigger. Macro is still a big tailwind. I think people are expecting 3 rate cuts next year, but I think generally the pattern we see is 1 year bear market, 3 year bull markets, and this is the first year bull market in crypto that we had.
Okay. Markus, one of the reasons why digital currencies are popular is because of money transmission, being able to transmit money from my wallet to your wallet and from your wallet to mine. But with central banks stepping into the scene now, with central bank digital currencies, is there a future for cryptocurrencies when I can actually go through a central bank to do the same thing?
Well, I think what it does, it's going to help with the general adoption, because people suddenly become a lot more aware, people become a lot more comfortable. But I think historically it has shown that people actually prefer non-government related assets, right? And I think one example, for example, this year when we had like the big kind of banking crash in the US in March this year, one of the most compliant or more compliant stable coins circles, for example, lost a lot of their market cap. And the market cap went to Tether, which is out of the US reach, basically being based in the Bahamas and so on. And I think that just shows that people have a tendency to move money into digital currencies that are outside of the reach of the regulator. So I don't think it's going to be kind of cannibalizing the market, quite the contrary. I think it's going to bring in more players, because some players want to work with a regulator, want to be with a regulated market, and others, as a majority of the market, I think until now at least, really prefer like a currency or digital assets that are basically free from any regulatory overhang.
And in your opinion, do you think all the bad actors have been flushed out of the system already?
Well, I mean, with bad actors, right, it's kind of difficult to answer, right? Because when there's money involved, it always attracts bad actors. But of course, the SEC has gone after.
But those bad actors were the big actors also, the main actors.
Exactly. These are the big building blocks, basically. And I think the argument, has been really they tried to be compliant. In the beginning, they were just building a technology stack. But we have seen this actually through the history of the cryptocurrency market over the last kind of 12, 13, 14 years, is really that exchanges have grown very quickly when the KYC process just included an email address and then that's it, right? That was always a trick for exchanges to grow very quickly. So, of course, now with a new player coming into the market, which is institutions, I think you want to be more compliant because you want to attract the big flow. And those are like really big flows that could be coming into the market.
But